Mark here, and thank you for joining me for another Greenbridge Investing Market Analysis. Today is Monday, so we're going to go over Bitcoin, the major markets, and particular stocks, especially if there's one you'd like to see, to get some clues as to what we can anticipate for the week ahead as we begin the month of June. Okay, so with that being said, I want to thank you all for joining me for this live stream. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we're going to start with Bitcoin, but you know, today's Monday, so we have to start with this first. I know no one likes the economic calendar. It's boring, I understand. But we need to know what's going on, especially the first week of the month, because that's typically when we have non-farm payrolls. Very important for Forex. So let's just look at this real quick. I don't want to spend a lot of time on it. You know, so we had ISM manufacturing today, and obviously the market is still strong. So, you know, had a good effect or whatever. We have the Australian Royal Bank of Australia rate statement. This is tomorrow. So this is important if you're in the Aussie dollar, any pair that involves the Australian dollar. Doesn't mean that it's going to be a negative move. It just means that you can have a range expansion if there's any kind of surprises in this news. Typically, when we see stuff like this, if there's a trade signal going into it, a lot of times we will avoid the trade signal because it's random. You know, the outcome is random. The best scenario would be a non-event for you. Okay. So in Germany, on the 3rd of unemployment change, unemployment rate, since the current environment, you know, employment's obviously a sensitive thing. This can affect the euro. All right. The European also has their unemployment rate. Then we have our ADP employment change. Again, these numbers can have an effect if there are any surprises, positive or negative. So that's going to be important, especially since the NASDAQ is pushing its highs. This type of report can change things quickly. So you want to know when it's coming out, right? That's 10 a.m. on the 3rd, which is what, Wednesday? So just be prepared. If there's like a change out of nowhere and then you're like, what just happened? Well, you know, there could be a surprise in the news. Canadian Bank of Canada rate statement. So we have a lot of interest rate statements this week. We don't really trade the Canadian pair right now, so I'm not going to worry too much about that. Then we have, you know, as we get into the close of the week, we have the ECB interest rate decision, which can affect the euro, okay, and pairs that are crossed with the euro. I know we have a few people that are long that euro, and the euro trade idea has done well along with the pound. Going into stuff like this, you know, if you've reached your third targets, great. If you have not, you know, that's where you have to kind of make a decision if, you know, you're still in a position, if you want to get out or if you want to take the risk and see if this thing runs further. Then we have on Friday, this is probably the second most important, next to the FOMC meetings and the FOMC rate decision. The non-farm payrolls is probably the next most important economic event that is scheduled each month. So important for all Forex pairs, important for stocks, important for everything. That's 8:30 on Friday, Eastern time. So we want to be prepared for that. We're probably going, you know, into Thursday or Friday. We're probably not going to have any trades going into that, most likely, or at least we're not going to take any new trades. All right, so that's the economic calendar. It's an important week. There's a lot of things going on, so you need to be prepared. Now, with that being said, if you have any questions as I'm going through this, please don't hesitate to ask. If you're new to Greenbridge Investing, please check out greenbridgeinvesting.com, and you can sign up as a free member there. We have a free chat room. You can go in there and ask questions and stuff like that. We also have an active investor chat room where you can go in there, and that's where we share a lot of trade ideas and insight. And also, obviously, we send our signals out to our members through text and through email. All right, so let's get into Bitcoin. Now, we sent out, speaking of trade signals, we sent out a trade idea on Saturday, very early. And that was based on this breakout right here, the inside bar. And you see the breakout, right? It's been hesitating. This is actually a good sign for the trade. Because if it was going to sell off once it went into this 95.64 to 10.168 resistance zone, it should be selling off now. It should not linger on the border of the resistance zone. So that's a sign of strength. This is good. This was a very aggressive trade because of the location. Someone brought up, Bella brought up in the chat room, I saw a great question because I addressed this in my trading view video that I sent out yesterday. When you're in a range like this, a lot of times these triangles, all right, this is basically a triangle. For those of you that watched my video, you know that I've been drawing this triangle on the chart, right? So it's basically a symmetrical triangle, and we know that those are continuation patterns. So Bella asked, does it have one more leg to go before it gives us a much better quality buy signal? Or basically that was the idea of the question, because in terms of Elliott wave, triangles typically unfold in 5 waves, and we only have 4. 1, 2, 3, 4. So, you know, and here's the thing, here's the way you have to look at that. We can't always expect these structures to unfold like the blueprint. Okay, Elliott wave basically provides the blueprint, and it says in general there's a tendency for these things to unfold in 5 waves, and if Bitcoin gives us that type of opportunity around that 8,500 area, you better believe we'll be happy to take a long signal there and perhaps even increase our risk because we will be so confident after the 5th wave completes the triangle. All right, but what if Bitcoin doesn't do that? It doesn't have to do that. And that's why we took this type of trade, betting that it may break earlier. Again, it's a bet. And, you know, if it pushes through here, if it squeezes everyone out, because you have these shorts that keep piling, if it squeezes out, it may push through this resistance and it can have a move higher, and it never gave the opportunity to buy it at that great price. So again, it's not, you know, when the market gives these things, it's if. And since there was a buy signal in a market that's generally strong, which Bitcoin is, that's why we said, hey, we'll give this a chance. We took a smaller risk, right? Smaller percent risk, and we'll see what happens with it. If this doesn't work out, then our next inflection point is that 8,500. And that's the way you have to play it. All right. That's the way we're going about it. So if this thing is at some point should break out, and it should break out higher. Right, Bella. So, and that's why there's a much tighter stop on that, because we're betting on, hey, this thing will break out prematurely and catch a lot of people off guard. And that was based on the buy signal that showed up there. Again, you know, there's no way to know if this is going to be the breakout move. It can just come out of nowhere. So in a sense, we're trying to play that random aspect of the market. Meanwhile, if a better quality opportunity shows up, we're prepared for that as well. Well, yeah, you know, flats and triangles are similar, but right, if we don't get the triangle, then it would be considered a flat based on Elliott wave rules, you know, because you can have like compound flats and all that stuff if we don't get that 5th leg of the triangle. You know, we don't sit there and really stress ourselves out about, you know, what it could be. It's just either the market's going to give us this or the market's going to give us that. That's how we look at it. Okay, because, you know, at some point you have to make a decision, you have to take a risk of some kind, and the risk reward still makes sense at this level. And that's why we shared that as a very aggressive trade. So like I said, so far the price action is doing its job, and we're letting the trade play out. All right, good questions, guys. So let me jump over to the NASDAQ now. I have to try to keep this, you know, I tend to talk a lot and I like to answer people's questions. So these things tend to go like 30 to 45 minutes. But today we have our podcast at 4:05 p.m. Eastern time, and I have to prepare for that. So, you know, so I have to cut this thing off like at around 3 p.m. Eastern time. So I have about 15, maybe to 20 more minutes, and I'll try to answer everyone's questions. If not, join us for the podcast, and we'll answer them there. All right, the podcast is on the same YouTube channel here. We just start at 4:05 p.m. So here's the NASDAQ, right? And this thing is strong. And I talked about this. High or low. We had a webinar yesterday, by the way. Thank you for everyone that spent the time with me. It was like almost 2 hours long. I know Carlos was there. We had, you know, a number of people. And in that webinar, I was talking about oscillators. Now, one thing about, you know, the oscillators relative to prices, one of the points that I was making was price always comes first. Price always comes first. Without price, there's no oscillator. So this price keeps making higher lows. And where there are higher lows, higher highs typically follow. That's why we don't get caught in any opinions like, oh, the market's too high. Oh, the market's overbought. Oh, the market's a short. There's nothing short about this. That's why we're still interested in rotating stocks, taking profits and then rotating them into other stocks until this game stops. And at some point, it will find a peak and it will pull back in a more dramatic way. But until that point happens, we're not going to sit there and try to predict it like everyone else is. We're going to take advantage of the bullish momentum while it's still there and go into this with no opinions. That's the short-term mindset. So as far as this thing goes, 9,700 is the level, and that's where it was at its peak, okay? And we're getting closer and closer to it. So obviously the market's very confident. The market's liking the news. Whatever is driving this thing, the market's liking it so far. Now, is this in a vulnerable area? Should I be going crazy, buying tons of stocks here with a lot of shares? No. This is a vulnerable area, and we've been saying that about this failed high situation, which did not follow through, this one over here, which went nowhere, and this one over here, which, we exited a lot of our stocks in this situation right here because we didn't want to get caught in the potential pullback if it was going to be a broad pullback. But since then, we've had some stock trades, and they're light, all right, and they're small trades, and we're just rotate those out into something else that gives us a setup, like I said, until the game stops. Now, can this thing push to 9,700? Yeah, at this point, that's what it's poised to do. Until maybe some other catalyst that comes out of nowhere. A chart will not help us with that, right? A chart cannot predict the catalyst. So we have a couple of potential catalysts this week, like NFP being one of them, and that can change things if there are any negative surprises. So that's why you have to be prepared, and that's why I always go over that economic calendar at the beginning of the week. All right, so that's the NASDAQ. It's strong and good for stocks. That's really all I can say about it. It's too early to get short. All right, again, any questions, please don't hesitate to ask. Now, with that being said, let's jump over to the DAX really quick. Again, the DAX pretty much follows this thing. And look, the DAX is pretty much doing the same thing, right? It just kind of pulls up a high, pulls back slightly. This is just a bunch of noise. As long as the stock market stays strong, this thing is not pulling back. Now, the DAX still is relatively weak because, remember, the NASDAQ is up here, and you can see the DAX is just a little over halfway there, which means if the S&P and NASDAQ retrace, this will probably go faster. And this would be a good short candidate in that scenario. So it's still too early, again, because if those markets continue to push, this has no choice but to push because it's following. Now remember, there's a bunch of European economic events this week which can affect this thing as well. So keep that in mind. So what to do if you're in the Eurozone with European denominated assets? Again, use this as an opportunity to lock in profits, reduce risk on issues that are not performing very well, or if there's something strong you like, you play the rotation game until this thing turns. Right now, your support on this thing is this 11,250 area. That's your most recent support. Once this thing starts taking out lows, like this higher low over here, which is what, 10,8 something? 10,880. Once it starts closing below that, then you have bearish momentum is more likely in play. All right, that's the DAX. So the point here is I think it's only Friday's candle. Oh, okay, that's possible. So in theory, it should probably be higher then. Okay, so the most recent candle really doesn't really matter to me much on the DAX anyway. It's really like just the general area, the general levels. And since the NASDAQ and S&P are strong today, I would imagine the DAX is probably a little higher. It'll probably gap higher tomorrow or something. But the point is, you want to just keep an eye on the general location of where it is relative to its structures. But you have to use the S&P and the NASDAQ as your main timing mechanism. So that's the DAX. Thanks for pointing that out, Bella. Because again, I don't trade the DAX. I'm not very active in that. So let's take a look here at, I want to take a look at gold, and we're going to take a look at oil. So let's see here, gold, XAU. Now, again, gold has been tricky. and it continues to be tricky. We missed this beautiful move here because of the risk. We saw this and we're like, right, but this candle was too wide, and we have to be cognizant of our followers, and we don't want them to get caught in something where they can lose more than is comfortable. You know what I mean? And this thing can pull back and it can be ugly and this and that. So we stepped aside on this one and we missed this really nice move. Now, that's going to happen. This move in theory, off this basically this higher low, in theory should make a higher high, but it's hesitating now. Is this a short? Who thinks this is a short? Anyone? Quick question for the people that are following here. Anyone think this is a short? I mean, it looks like a bearish pin bar, and it's a potential lower high. Anyone think this is a short? I know there's a little bit of I'm probably like about 30 seconds ahead of you, so I'll wait here a second. But the answer really is no, it's not a short. And the reason is, even though this is a bearish pin bar, sort of, it hasn't closed yet. Secondly, it hasn't taken out any daily lows. So what's the difference between the aux pin? I'm not sure. What do you mean by aux pin bar? Not sure what you mean by that. And Roku, as far as risk reward, because that's a good idea. I mean, that's a good question, and I'll address that because I do want to cover Roku real quick. Right, Nicholas, you guys are right, and I see there's a little bit of you guys are like maybe 30 seconds to 45 seconds behind, thanks to YouTube here. But this is not a short, okay? And like I said, it hasn't closed weak. It hasn't taken out any lows. So you avoid that. And the lesson behind this is you may see other markets that are in a similar situation. People make this mistake with Bitcoin all the time. They see something like this, and right away, you go on some of these forums and stuff, and right away, Bitcoin's a short. Oh, Bitcoin this, Bitcoin that. And they look at their 4-hour chart. Oh, it's a short, blah, 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 blah. It's not a short. So this is now, at the same time, you don't go chasing this thing either, because the risk is very high at such a level. So what do? Right? We believe gold is going to go higher, but we have to wait for a setup that makes sense where we can define our risk clearly, and we can't do that here. So Bitcoin's going to gold is going to have to pull back and give us some sort of buying opportunity. And if it doesn't, well, we just let it run. But at some point, it'll give us a continuation pattern, or it'll give us a pullback, and then that's what we will be prepared for. That's how you play these. You don't, a lot of people, their alternative is, oh, well, the daily chart's not giving me anything, so I'll go to a 30-minute chart and I'll look for a buy signal on there and I'll get in. But now you're taking enormous risk, because now you're buying it on some little tiny pattern that's inside of this candle, and that pattern carries no weight. So if the next candle takes out this low, now you're caught in that thing. So that's why that doesn't work. All right, you have to stay on the same time frame. All right, so that's enough about gold. Let me jump into oil, and let's take a look at oil here, because oil has been also, doing some interesting things. Oh, okay, tail of pin bar, and that on Roku are similar. Oh, okay, good question, pal, good question. You know what? I'm going to talk about that when I get to Roku. That's a great question. So let's take a look here. Let's go to oil. All right, and then after oil, I'm going to go over the pound real quick, and then we can cover some stocks, and Roku will be the first stock. So let's go to oil. Now, oil's still strong, right? Look at this. This is the neat chart that I always go over, the Owanda chart. Oil's still strong. No reason to sell it. No reason to buy it, because now you're buying. It doesn't have a lot of potential left. Looks similar to the NASDAQ, doesn't it? Right? Instead of 32 on the NASDAQ, we have 9,700 on the NASDAQ, but it looks very similar. So you have to let this thing go until it gives us an opportunity. Now, how does that translate into USD WTI, which is the common chart that everyone pretty much sees? Again, it's not much different in terms of structure. The prices may be different, but we're fooling around inside this gap, like we talked about before, can act as a resistance. So we don't want to get caught in that. The potential here isn't great. We have to wait for a pullback. And sometimes a market won't give you a pullback for a while. And if it doesn't, you just move along until you find a better opportunity in another market. There's lots of markets to trade. We don't have to be here and get stuck on oil all day. So again, nothing to do with oil here. It's still strong. You know, if anyone has any oil or any oil stocks or anything, you should be in a good position. Just like the NASDAQ, there's nothing to do here but sit back and let this thing run until it gives a real reason to sell. One clue that this thing was not going to pull back was this bullish pin bar here. We talked about this in one of my videos because I remember the pin bar, and I remember because people were starting to get bearish on oil, and I'm like, that when you see this, that's a higher low, just like the NASDAQ, right? So that thing is still strong. As you can see, it kind of fooled around a bit, it consolidated a bit, only to break higher. So don't get mixed up in that kind of noise, or don't start thinking the trend has changed when you get like one little candle like that. All right, there's nothing bearish about this right now. Bearish would be we take out the supports followed by a lower high. That would be much more bearish. We have nothing like that. So that's oil. All right. Again, if you have any questions, please don't hesitate to ask. I know I'm moving quickly here because we still have that. You know, it's just about 3 o'clock, and we still have the podcast I have to set up for. So let's take a look here at the pound real quick. Now we had a couple of nice trades. I know some people took the euro trade. We had I think that was an unofficial. That was one of our more aggressive unofficial trades, I believe. The euro and the pound. We had an alternate pound trade, and then we had like an official pound trade. So, and I know people took both. The pound. Now the original target was 24.50. I saw Andrew put 25 on the trade sheet, but it was actually 24.50. I mean, that's what I have here. I set up this trade. I'm the one that sent this one out. Either way, I mean, what's the high of this candle here? 24.93. All right, and that's where it's fooling around there right now. So if you didn't get out at 24.50, which was target 3, you're only a few pips away from the 25 target, which is like right there. What a great trade. All right, this trade was taken from this low over here, the 22.15 area right here, right? The high of this candle, which is 22.03, and we gave it some room. I remember when I sent out this trade, it was moving quickly, and I put it at 22.15. But there was plenty of time to get into this, at least if you got the trade. I know our Eurozone people probably got that trade at like 3 a.m. their time, something like that. But you still had some time to get into this. And it even gave a little continuation pattern here. Point is, they don't all work out nicely like this, but when they do, you know, very nice. What made me more aggressive, because you notice this was a 2% risk rather than 1, was the location, right? The compound location. We have a higher low in general, and I've pointed this out before, right? We have 2 higher lows on top of each other. We have this one, right? One giant higher low relative to that low, and then we had this little higher low situation on top of that. So when they work together like that, when you have that, that's a pretty powerful signal. Those situations are not common. You're not going to see them often. So that's the pound working out great. You know, so either you're out of this thing for a nice profit, or you're only a few pips away. If it starts to give you a hard time, hey, take the profit, right? You're pretty much at target 3 at 125. You're almost there. You're only a few pips off. Take the money. But this thing is a nice candle. That's a very strong candle. I would expect it to go to 125, looking like that. All right, it's only a few pips away. Anyway, so that's the pound. Any questions, let me know. Again, we have our podcast in about an hour. So if a question comes to you, at that time, please come back to our channel here and join us for the podcast and ask us then, because we're going to be talking about specific stocks and stuff and, the general markets. So here's Roku. All right, again, I sent this one out, and I sent this out in the pin bar. So here's the question from Pal. There was a similar pin bar situation, right, with gold compared to Roku. So why did I send out Roku and not gold? Well, relatively speaking, this pin bar on Roku, although they look similar, this thing is relatively smaller. This is about, see, the high to the low here is about 8 points, okay? And with gold, you were looking at like 30 or 25 or 30 points or something like that. Now, I know the share size isn't 1-to-1, but I didn't like the way the noise that's in gold. I mean, you have to sit there and watch this thing go to like 1670 and then maybe go in your favor. And I didn't want to, deal with all that. Roku is not like that. All right. It's a different behavior than gold. So it's really knowing your instrument that really made the difference. I know Roku. I know what it's capable of doing. I know also that Roku is following the NASDAQ. Gold is following itself, right? Gold isn't following anything. It's just doing its own thing relative to the weakening dollar, and gold just does its own thing. It's very emotional. Roku is going to react to the NASDAQ because Roku is a NASDAQ stock, and that's doing it very nicely, right? And what did I say when I sent this trade out? I said if the NASDAQ continues higher, this thing will benefit. This thing was at a very attractive level, and it gave us the pin bar, and we took it. And it was a little noise at first, but now look, this thing's fooling around at 112.77, so it's about 3 points in our favor. That's still kind of low for Roku because this thing is a mover, right? So reaching target 1 at 118 shouldn't be that tough, at least for the next couple of days, as long as the market cooperates. Now, hopefully we can get out of this before NFP, or at least one target, at least reduce the risk by 1/3, hopefully. All right, but this thing's got a lot of potential, and that's the reason. Better reward risk is what that translates to. Pal, does that make sense? Knowing your instrument, better reward risk. Remember, everything is relative to price structure. Price structure comes first, and I like, even though this price structures are similar, the reward risk on gold was tougher, and gold is a tougher instrument to trade in general, where I know that this is going to be dependent on the NASDAQ, and I know how strong the NASDAQ is, right? So that's the reason. I mean, so basically, you have to have some experience to know that and to be able to use some discretion. With gold or any stock being around all-time high with no historical supports, how can you calculate targets for risk in case of a trade? Well, all right, that's a good question, Bella. In a situation like that, that's where you could use projections, like Fibonacci projections, which are different from retracements. There's a projections tool. I believe, is it in here? Yeah, you see all these tools that have on TradingView. Well, there's a trend-based fib extension. That's what they call it. So you could use a tool like that to basically project targets based on Fibonacci ratios, and they tend to be reasonable relative to recent price structure if you have no historical structure to go by. All right, so that's typically what we'll use for a projection. So that's a great question. And what I like about that is it gives you realistic projections based on, because you have to measure 3 points of current price structure to project forward like that, and it gives you proportional points. And of course, you don't want to use the exact point. You want to put your targets slightly below the point because everyone sees the same points. We're not the only ones that use projections like that. But since most of the time we're buying these pullbacks, like Roku, for example, we're buying a pullback, we have plenty of structure to work with before we have to get to projections. And that's where, our initial targets are based on that. All right, because we always want to stay within reason. I don't know, some of these people get these crazy projections and maybe they do it for attention, but we want stuff that's within reason so that we can get out green. You know what I mean? All right, great questions, everyone. Any other questions? I have time for like one more question. Anyone want to see any kind of stock or anything? I could do like maybe one stock besides Roku here, because again, I have to start setting up for the podcast. For those of you just joining us, make sure you check out greenbridge.com, greenbridgeinvesting.com. Man, I can't even get my own name right. greenbridgeinvesting.com. We have a free chat room there. You can check out. Also, we'll have our podcast in about an hour on the same YouTube channel here. So you should definitely check that out because we have a lot of interesting things to talk about on there. You can also, participate, ask questions here, and we'd be happy to answer them. All right. So any other questions? Any other questions? I'll give you guys maybe another minute here to ask. Meanwhile, and again, we had our webinar yesterday. Thank you again to everyone that spent the time. It was about oscillators, and I compared 3 different oscillators. And I think people got a lot out of that webinar because I introduced some things that they were not familiar with at all. Pound franc, sure. Carlos, let's take a look at it. Pound franc. Now I'm going to guess the pound franc is probably good looking because it's based on the pound, and the pound has been moving. Yeah, okay. So pound franc. So this is a very similar structure to the pound. All right, the pound had a similar rally, right? Similar rally off of a low, just like this. And also this thing has a very similar consolidation structure, high or low, broad high or low. The thing is, this thing is noisy. It's very noisy because you're dealing with the franc rather than the dollar. And, it's the pound against it. So whichever one moves, like if they're moving in the same direction, the pound needs to move faster for this thing to go vertical like it's doing now. It's strong. I mean, there's no question you have a high or low here. In theory, you have another little mini high or low here. And in theory, this thing should go for a higher high. But you're going to need the pound, of course, to cooperate, or the franc to just continue to get weaker. So if you're in this thing, nothing to worry about, but let it run. I'm sure you have your targets. Because I think Andrew called a trade in one of these. There's just so many, I lose track of them sometimes. But yeah, this thing is in good shape. I like it. Don't get fooled by this kind of break of support, because this is a failed low situation right here. This failed to go lower. And now you have this, which means the shorts are getting squeezed. Okay, CTXS. All right, let's take a look real quick, and then we're going to wrap this up. All right, thanks, Michael. CTXS. I know, Michael, you've been all over this one. I think you brought this to our attention initially. Yeah, look, very nice. Michael, you mentioned this thing around here in the failed low area with these pin bars. It's a beautiful trade. Again, similar to like the pound, right? This structure, this entire structure right here is a consolidation. It's different from a contracting consolidation. This one's expanding because the highs are getting higher and the lows are getting lower. But overall, the entire structure, the range of that structure is still higher than this low, than the March low. That's strong. That's a sign of strength. So this pullback was a buying opportunity. If you're long this thing, this is beautiful. Let this thing run. You have a higher low. In theory, it should push at least to try to attempt to push that high. Of course, you're probably going to need the NASDAQ to cooperate. If the NASDAQ has a turn, a broad turn, this thing will probably give you a broad turn too, because you have some resistance to face. Like this level here, 151, right? And then you have the peak around here, 160, what is that, 154, 154. So you have some resistance levels to deal with. But you just let this thing run at this point. There's no reason to do anything but let this winner run. You have this nice strong candle on Friday, and this little inside bar right now is really nothing, right? You have this little pin bar situation. I would expect this momentum to continue until the NASDAQ stops, right? And the NASDAQ looks like it's going to try to push to 9,700. So in that scenario, you should at least be able to test these low 150s. So I'd be pretty confident with that at this point. Great questions, everyone. Great questions. All right, so with that, I'm going to have to wrap this up because I have to get to the podcast now. So again, if you're new to Greenbridge, make sure you check out our podcast at 4 or 5 p.m. Eastern Time. Check out our website, greenbridgeinvesting.com. If you have any questions, please join the chat room. Come to our free chat room and ask there. I'm very happy to answer questions in there and have people join us in there. And if you want to check out our signals and stuff like that, you can see our performance stats on our website. All right, everyone. Great. So thank you again for spending some time with me here. And I'll see you all at the podcast. Have a great day, everyone. Bye.